Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting on the 4-hour chart with the bullish scenario, where we are looking for an impulsive structure to the upside in 5 waves, after which we expect a bigger retracement to the downside. Usually a minimum target for wave 3 is the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, sitting at 50.5k, and that is quite an interesting area because we also have some additional resistance here, which is the blue box, sitting between 50.7k and 50.9k. Previously, we also had resistance over here. As you can see, it was touched nicely, and price now hit this resistance for the second time, increasing the probabilities that sooner or later price will pass this white resistance box and then move towards the blue box above. In this scenario, we are looking for a couple of nested 1-2s in this range over here. So we have a 1-2, 1-2, and then a few more low time frame 1-2s, and then we get our wave 3 towards the upside. And as you can see, it's nice and vertical. That's what we want to see. Now, what we are eventually looking for when we go into 3-4-5-4-5 behavior is a bit of a grind towards the upside with volume slowing down. An important level on the chart is the 0.618 taken from the low of 2 to the high that we have at the moment, sitting at 44.4k. Price is not allowed to move towards the downside just yet to hit the 0.618 over here, as that would be an invalidation for a wave of 4, and therefore it increases the probabilities. This would be a 3-wave structure to the upside in an ABC and continuation to the downside. If we look at the bearish scenario here, then we're looking for a flat structure, 3-wave move in a wave A to the downside in a zigzag, 3-wave structure to the upside in another zigzag in a wave B, which is also most common for a wave B, and then we are looking for a 5-wave impulsive structure to the downside in wave C, moving below wave A. The most common flat pattern is an expanding flat like you see on the chart. Wave A, wave B, wave C. B going above A, C going below A. Then you have a regular flat where wave B usually does just take the high of wave A, or might not take the high of A, because a 0.9 is the minimum retracement level for a wave B, which means you don't yet take the high. That's still okay and also common for a regular flat. And then wave C moves below wave A, and they have a running flat in wave A, B, C, and then continuation where wave C does not take the low of wave A. Now, because the expanding flat is the most common flat, one always starts looking for the expanding flat. Most common target for an expanding flat wave B is between the 1.236 and the 1.38 Fibonacci taken from the high to the low of wave A, giving you a target area between 51.6k and 53.1k. Close to that most common target area for wave B, we have this blue resistance box over here, as mentioned earlier, but also, and even more important for me, is the monthly gap top over here at 53.3k in confluence with the 1.38 target for wave B in an expanding flat. For an expanding flat, the 105 is a less common target at 49.6k, the 1.618 is also a less common target at 55.6k, and the 0.9 is generally for any flat structure a minimum target, which now means that a flat is possible because we have entered the area above the 0.9 fib at 48k. The final scenario is also a bearish scenario where we're looking for a zigzag in wave W, zigzag in wave X, and then eventually we look for a wave Y to the downside. In this scenario, preferably wave X does not take the high over here, because the moment price takes this high, a flat structure has a higher probability compared to a WXY. In this scenario, because wave W is a zigzag structure to the downside, wave Y only has 2 options, either a flat structure or a triangle structure. Now, for a triangle, it's way too early to call, and first of all, we need to see a local weakness for the end of a wave C or X. The common target area for your wave is C, taken from the low to the high of A to the end of B here, is between the 1 and the 1.236 trend-based fib extension, which is between 47.6k and 48.9k. If we go to the lower time frames, however, we need to try and count a 5-wave finish structure in this wave C, and then a 1, 2, 3, 4, 5. But what is interesting in this last leg to the upside is that it is very difficult to end a wave 5 over here. Reason is that inside wave 5 we want to count an impulsive structure. 1, 2, 3, 4, 5. No overlap between 1 and wave 4 over here unless we have a diagonal structure, but that is clearly not the case over here if this is the low of your 4 and this is your 5, right? So what we then have to look for is an impulse. Well, if we do 1, 2, 3, 4, 5, we would need to end wave 5 over here. And then this is a flat structure because we made another high above the end of a wave 5 then in a 1, 2, 3, 4, 5, which therefore means this is a corrective structure and probabilities are higher to move to the upside. If we want to try and end wave 5 here, then we need to count this as a 1, 2, 1, 2, 3, 4, 5. The problem is that now in this second 1, 2, 3, 4, and then a 5, and then another 4 and 5, what we're looking for is that there's overlap here between the second wave 1 and wave 4, right? 1, 2, 1, 2, 3, 4, 5, 4, 5. Overlap over here between the second wave 1 and the first wave 4, which invalidates an impulsive structure. So therefore at the moment probabilities are low that this high here is the end of an impulsive structure to the upside for a wave 5, increasing the probabilities that what is happening here is corrective, and therefore it increases the probabilities to still look for this high to be taken and then very likely for this high to be taken as well. Even if price moves towards the downside, that is the highest probability. Not to forget, if we are in 3-4 wave structures, we can definitely have bigger retracements before continuation because of potential wave 4s. If we look at the CVD divergences on the 15-minute time frame, we had a bit of bearish CVD divergences here, and these have played out because price moved to the downside, and now we have to be very patient, wait and see what price is going to give us, as after this high over here and the low it made, it needs to form a little bit of a range to get back to CVD divergences. We also have news this week. Tomorrow, Tuesday, February 13th at 2:30 p.m. Central European Time, we have high impact news, as you can see over here. So make sure you trade safe around these hours. And also on Thursday and on Friday, we have some high impact news. So it might be a great volatile week. That's what we like to see. So if we then look at the probabilities of the different scenarios, then on the 4-hour chart, the probabilities at the moment remain higher to take this high sooner or later. We also touched the 886 taken from the high to the low over here. And that also is a sign that any corrective structure or any move to the downside has a higher probability of being a C or Y, increasing the probabilities to go back up later anyway to take this high over here. But more locally on the micro, as explained, probabilities remain higher to take this high over here because the probabilities are higher that what is happening here is a corrective structure. Now, by all means, what we do have to be aware of is this box over here. This box is the target area for your wave X or your wave B. It is over here between 48k and 53.1k, right? If I open the flat, then you can see the box is up until the 1.38. So it is important in this area to be aware of potential weakness. As long as we don't see weakness, we are going to be looking for price to move up, but this is a very important area of resistance generally, where potential weakness might appear, and also turnarounds for a potential flat. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.